Welcome back to Liberty in Finance. We are glad to have this new guest. We have Jonathan Lee, the chairman of LPV, Largo Physical Vanadium. We're meeting him here at the Rule Symposium on Natural Resource Investing in Boca Raton, Florida. We wish you were here, but because you aren't, you can access this video as well as others that we've made. And if you still subscribe through the link in the description of this video, you can get access to all of the live stream content that was recorded at the symposium for 6 months. You don't want to miss out on that. And Jonathan, I'm grateful for you joining us here on Liberty in Finance.
Oh, thank you for having me.
Now, your banner caught my eye because you talked about vanadium, which I understand is one of the strategic metals that's important for the coming electric economy. So can you tell our viewers, why is that a big deal? What is LPV specifically doing in that space, and why should they be checking it out in case they want to participate?
Yeah, sure. Largo Physical Vanadium. Vanadium is used in steel applications historically. It is a critical metal in Australia, US, North America, and Europe. And Largo Physical Vanadium is a physical holding company where we buy and hold physical vanadium. But instead of store, and like other physical commodity products, but unlike other physical commodity products, instead of storing it, paying storage fees and warehouses, we expect to be generating storage revenues by storing the vanadium in these vanadium flow batteries and enable the energy transition in that respect, because it is fully recyclable, it doesn't degrade in these batteries, and so it's a symbiotic relationship with the battery customer, whereby we generate storage revenues and the battery customer does not have to buy the vanadium in the battery, which is the largest cost to that battery customer and the manufacturing of those batteries.
So, unlike many of the other companies we've spoken with here at the conference, some of them are in exploration, some of them are in mining development or mining operations, some of them are in royalty and streaming to support financially mining companies. But you're physically owning this physical asset of vanadium itself.
Correct. We like I said, we own roughly about 2.9 million pounds of vanadium pentoxide equivalent across 2 or 3 warehouses. And we should be deploying the first batch of vanadium into the batteries in the next coming months.
So, having come from an engineering background myself involving in the energy industry, I'm very keen on what is the application for use of these batteries, because batteries usually are stay healthier and so on if they're actually cycled rather than just sit there. Yeah,
this technology has been around for 30 years or even more. The biggest hindrance to this flow battery, which is using grid storage, so C&I, which is commercial, industrial, or in front of the meter, which is at the utility. That's the use case, but the biggest hindrance has been the cost of the vanadium and the volatility, of the price of vanadium. And so under this new business model, the battery customer doesn't buy the vanadium, thereby potentially reducing the cost of the battery to make it comparable and competable and compete, so it can compete with the largest elephant in the room in terms of energy storage, which is lithium-ion batteries today.
Right. So I'm still trying to get a grasp on this, so forgive me for drilling in. So while you're owning the physical vanadium asset itself, are you basically lending it out in the form of a battery for these customers who actually have an application, but they know that they have to give you, eventually they owe you with the vanadium back?
Correct. These are long-term leases. But yes, you're correct. So the ownership of the vanadium will always stay with Largo Physical Vanadium. We'll rent it out, generate storage revenues, and actually enable the cost competitiveness of these batteries versus lithium ion.
Folks, that's a new one. I haven't heard that model before. And having come from an energy industry, this is fascinating because it really liberates, for example, if people want to install a solar field or whatever, but the sun doesn't always shine, so to level this out, and there's lots of applications where you need storage to make things make sense in remote locations, or when you have cyclical sources of energy and so on. That's very fascinating.
For example, it's exactly that application. So for example, the first use of Largo Physical Vanadium will be used in Mallorca, Spain. And so it'll be a solar panel plus battery storage on Mallorca, which is an island off of Spain. And so it's effectively a microgrid.
Cool. Okay, so the nature of investment opportunity that you offer to potential investors, what can they do? They buying shares in your company, or how does that work?
Investors can purchase Largo Physical Vanadium shares under the ticker VAND in Toronto and VANAF on the OTCQX.
We'll put, just in case you didn't write that down fast enough, it'll be in the description of this video, folks, in case you want to get involved with owning LPV. But if they just want to find out more about it, how can they find out more about the company?
Yeah, so we publish all the material on lpvanadium.com. We show the net asset value of the portfolio. We show the management fees, the amount of vanadium we hold. It's all on that website. And even there's information on vanadium, because I know it's not always known, but you can get the supply-demand dynamics, kind of the growth of where the vanadium's going over the next little while, and that's all on lpvanadium.com.
Could you go ahead and give us just the elevator speech on what is this? Our viewers are quite conversant in gold, silver, copper, some of those things. This is a new one for us. So as far as how the supply and demand is going globally.
Yeah, so I was in previous iterations at another buy-side firm. I was invested in lithium companies, and what we saw was the Chinese were ahead. They invested and they've purchased leading lithium companies from 2012 all the way through 2019. And if you saw the price of lithium over the past 2 years, it's exploded because of the use of lithium in lithium-ion batteries. And if you see what Chinese firms have done over the last year, they've announced 3.5 gigawatt hours of vanadium flow batteries. That could actually generate an additional roughly 15% of additional vanadium demand over the next little while. And so even the early investor in CATL, which is China's largest battery manufacturer, they invested in China's largest vanadium flow battery earlier this year. So, we think that the demand is going to be there, and it's starting already to generate, a different supply-demand dynamic in the industry.
And our viewers have been hearing this as I've interviewed various company representatives, but it's a big deal that we're doing it here at the Rule Symposium, because in order to be an exhibitor here, you have to be invited by Rick Rule, who means he's already done his due diligence on the company, on the management team, on your balance sheet, and he has reason to believe, as he does in all of our talks that he has on our channel, because he appears monthly on our channel, that there's unrecognized value here, because that's what he likes to do, is position himself. Yep. Always the contrarian, always trying to find the place that people don't know you need to be before they realize it, because it's too late after they realize it. So anyway, he asked you to come here, so that's another reason that we want to make sure.
He's also personally invested in our firm as well.
Exactly. That's a requirement. I mean, he won't have people in the show that he isn't invested in. So anyway, folks. Grateful to meet you here, Jonathan, at the Rule Symposium. And there's more information in the description of this video, folks. Check it out. And always grateful to meet new guests on Liberty and Finance, and glad for coming. Thank you for coming on.
Well, thank you for having me.
Yeah.
I appreciate it.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for October 2nd through October 9th, 2023, while supplies last. This week we feature two different specials, Silver Kangaroos and Fractional Gold Eagles. We have 2023 Australian Silver Kangaroos at just $3.15 over spot. We also have 1/10 ounce Gold Eagles at $32 over melt and 1/4 ounce Gold Eagles at $60 over melt. The 2023 Silver Kangaroo from Australia are renowned for their 4/9 fine purity, as well as their recognizability and design. Like many other coins, they come 25 to a tube. However, unlike others, the Australian Monster Box is just 250 coins, making it the most affordable Monster Box available, especially with a premium of just $3.15 over spot per ounce. And finally, Silver Kangaroos are IRA eligible. The Gold Eagle was first released in 1986 and has been one of the most popular gold bullion coins in the world, providing instant recognizability and investor trust. The 1/10 and 1/4 ounce Eagles are additionally sought after for their high degree of flexibility and liquidity. Like the 1 ounce Eagle, the 1/10 and 1/4 ounce Eagles are 22 karat gold strengthened with copper. They're 1/10 and 1/4 of a troy ounce respectively and come in tubes and boxes at quantity. The 1/10 ounce gold eagle is just $32 over melt, and the 1/4 ounce eagle is just $60 over melt while supplies last. They're also IRA eligible. And if you'd like to learn more about a precious metals IRA, an IRA holding assets in a private depository rather than a bank or brokerage, call us and we'll be happy to help you in that process. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.